Good morning and welcome to today's webinar, which goes by the name Real-Time Daily Trading Ideas. This is our internationally oriented webinar addressed to traders all over the world. We will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. At this point, I would like to introduce myself to the audience. Some of you may already be familiar with my voice, some of you may not. Anyway, my name is Alex Raftopoulos and I'm very happy to be moderating this webinar. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Paul's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and Forex offerings with spreads of just 0.8 pips. Please feel free to have a look around our website and explore our international activities. And do not hesitate to contact us should you have any questions. Well, enough of me for the moment. Now it's Paul's turn. Good morning, Paul. What's your outlook of the markets for the moment? Ta-da. Zack.
Good morning, Alexander. Good morning, everybody. Thank you for joining us here today. Here we are, Tuesday, 29th of January 2019 for the real-time daily trading ideas for Admiral Markets. I hope you can all hear my voice. Hope you can all see my screen. What we have here is, I thought, just to start with this, a little tool that you can find which is very useful for all traders, which is on the Admiral Markets page. If you look under the Analytics tab and go for Forex Calendar, you have there access to all the sort of news that's coming out for that day and for that week. I have it filtered just for the high news for the rest of the week. What we've got is we've got a bit of news, and once again it's another Tuesday. Okay, there's another Brexit vote going on in the UK this evening. I have to thank Theresa May for being very kind enough to put these votes on a Tuesday evening, so it gives me something to talk about during my real-time daily trading ideas slot. So that's very kind of you, Theresa. Thank you very much. And what we'll do is we'll come back and have a look at the implications of that further Brexit vote. We'll have a little bit of a look at that later on in our session. But what we can see is that there's quite a lot of news coming out this week. Okay, when there's a lot of news coming out across the spectrum in terms of the major pairs that we particularly look at, well then you always have to be just a little bit wary, because that news can provide a little bit of volatility. It can buffet us about in our positions, so it's important to understand what we have coming forward so that we can plan accordingly. There's an awful lot of confidence measures coming out this week. You can see that therefore even so for tomorrow, we've got confidence coming out in Japan, Germany, the Eurozone itself, and also in Switzerland later on in the week. But I think one of the big things that we're going to be kind of starting to look at for this week, and something that is very much playing on my mind, is we've got the kind of, let's say, the official start of the US-China trade talks. Okay, and my own view for this year is that will be perhaps the defining moment for global markets. If Mr. Trump and President Xi can find themselves agreeing on a good sort of trade agreement, then I think what we'll see is we'll see a bit of a relief rally across all markets, and everyone will be hunky-dory. If they are unable to agree a good trade agreement, then invariably I think what happen is that we'll have those sort of those dark clouds will gather over financial markets. So I really think that, as I said, this is one of the defining moments for 2019. I'm going to be keeping a very keen eye on it, and of course how the markets react to that. We've also got tomorrow FOMC rates decision. We also have on Friday the big NFP, 1:30 UK time on Friday afternoon. So and we also have PMI, German PMI there, or Eurozone PMI there on Friday morning. I'm kind of interested in that because the forecast is for 49.9. For those of you who are very new to trading, PMI is one of the few fundamentals that's actually very, very simple to follow and get a grasp of as a trader. Very simply, the PMI is marked against the sort of the level 50. If we get a print above 50, that shows that the economy, or that particular sector of the economy, is still growing. If it shoots below 50, well then we're actually that part of the economy is decreasing in size. And if we start to get a slew of below 50 marks, well then that gives us great indications that the economy's not looking good. We're going into recession, and of course we've had lots of talk over the last few sessions about Germany and its whether it's in a technical recession and whether that would become a full-blown one later on this year. So there's definitely something to keep an eye on for us all there. But let's move across to the charts. I'm just going to swing across here. Let's hopefully that you can all see those charts showing up there. As I said, I'm going to go through a few of the major pairs that we look at. I'll give a few ideas on some trade ideas. As I said, that we've got Brexit vote happening once again later on today about 7 o'clock. Those of you who, like me, keep a keen eye on what's been going on here in the UK, both in terms of the political situation and the impact that has upon markets. Well, it's been a rather eventful few months. You all know that yourself. You don't need to be an expert trader and analyst to realise that that all those markets are driven by the sentiment of let's say commentary by either politicians or how some of the political votes have gone. But certainly what we've seen is, and interestingly, is that over the last couple of weeks, where we have seen both maybe an element of belief that there might be a softer Brexit involved, or alternatively the belief that as Mrs May's withdrawal agreement got voted down, that we'll actually sort of see a harder Brexit. For whatever reason, that has had a positive impact on sterling. Okay, and if every week I talk about how I do a little bit of a strength matrix of my own, and what I can see here on the pound is that at the start of at the end of last year, start of this year, sterling was 6th and 7th out of 8. But over the last week, okay, it's rallied up to number two from 8. On the other side of it, whereas when we started with the euro, end of the last year, start of last year, it was about 3rd or 4th. It's now down to 7. It's in the bottom 2. Okay, and I think there's the discussions are that should there be a let's call it what people would term a harder Brexit. Well, then that actually will be harder on the eurozone than actually on the UK, and we'll have a little look at euro sterling to give you a little bit of an idea of that. But just looking at sterling itself, okay, the pound against the dollar, you can see there on the 4-hour chart, it's been in a nice, very clear uptrend. For those of you who are new to trading, okay, I'm just using green bullish, red bearish candles, a blue 20 period moving average, red 50, and a green 200 period moving average, drawing in some significant levels of support and resistance. And you can see here we've got the big round number 130. Last week we were actually looking here, okay, we were looking at a trade here around the sort of engulfing candle, key reversal candle, which took off nicely and ended up getting up to 130, but actually you can see went a good deal beyond there. Okay, it actually it went we went up to about 132, went a good 200 pips beyond that 130 big round number. And I see that there at the moment is that I see that as a little bit of a flag forming there, okay, on the 4-hour chart there. And we've just finished this 4-hour candle here. It's a rather bullish engulfing candle. Okay, it's a sort of an end of a scruffy flag pattern there. Just my view today on trading sterling would be, if you're going to engage in trading sterling, just be a little bit wary. We've had all manner of commentary coming out. Those of you who've been following it, we've had over the last couple of weeks for Mrs May's Plan B, Plan C. We've had the Grieve Amendment, the Cooper Amendment, the Brady Amendment, Today we're talking about the Malthouse Compromise. So, there's an awful lot of, let's call it political chicanery going on. There's all manner of shenanigans happening. And as people hear bits of that, as there's the ebb and flow of the politics going on, that will undoubtedly have an impact upon sterling. So I see that, as I said, it's been a nice little flag in an uptrend, but I'm a little bit wary of being heavy sterling today, simply because we've got that vote at the end of today, and that undoubtedly will have a little bit of an element of volatility provided into the market. So if you're going to trade sterling today, just be very, very clear on your risk principles and ensure that you're engaging in very strict risk management. Make sure that you watch your positions like a hawk. Be careful to not over trade or over risk. If anything, I'd be saying sort of dial down your your risk size. Okay, just because I expect us to see a little bit of messing around in markets as the sort of political shenanigans go on throughout the day. But definitely, you'll keep an eye on that sort of 4-hour pound dollar flag, and it's going to become a bit of a recurring theme. We've got a few flags showing up across the charts and across the markets. And we can look at that, but definitely what we can see is that there has been sterling strength for that last week. Okay, some really nice sterling trades, and if you managed to get part of that, well done on yourself. There's an element of that feeds into what's been going on with the dollar and what's been going on with the euro, and we'll take a quick look at those now as my charts update. So if as always, I like to sort of start with looking at the dollar index. Last week I talked about how possibly maybe we'll see a little bit. It could be see a sort of the right shoulder forming over the next few weeks. Okay, and we would see that before a bigger, stronger move down there about the on the dollar index, which would naturally have an implication against all those other majors. But look down on the daily chart. Well, actually on the daily chart, I see that we've had a bit of a scruffy bear flag there. It's formed, it's broken. My view is that the dollar index is probably likely to drift back down to that 95 zone. Okay, 95 seems to be a key line in the sand, and not unsurprisingly, it wouldn't be a shock if we see that being tested again, which would also be around where that daily 200 is. So, we'll see that would indicate an element of a little bit of dollar weakness over the next couple of sessions as price sort of drifts its way down towards that. Then invariably, as I said, we'll see the non-farm payrolls towards the end of this week, and that might have an implication on both the indices, the equities, and the dollar itself. So be sure to keep an eye on that. Then that looks at, well, if how's that impacted on the euro dollar? Okay, and if we look at it, euro dollar, right, the biggest trading instrument in the world, very popular trading instrument here in Admiral Markets. And if we look once again on the weekly chart, last week we talked about, could we see an inverse head and shoulder build? Could we see this 113 level act as as the sort of edge of a right shoulder? And last week, what we saw is we saw once again price drifted down to that 113, but it's bounced up again. If you remember, last week I talked about how I thought price was just being a bit squeezed. We had a squeeze between the 20 period moving average on the top and between the sort of 113 and 200 period at the bottom, and that's really just what's happened. We've had another week of being squeezed between there. Once again, you can see, there's a really strong buy off that 113 level. Okay, it's acted as pretty significant support. Now we've got to see is, well, what's it going to do here at that weekly 20? Okay, is it going to reverse off there like the last time we've seen it touch there? 1, 2, 3, 4, 5 over the last sort of 5 weekly touches. Well, that would just we'll just have to wait and see. Okay, I think what we'll see is that we'll see some indications on that Friday when we get once again indications of the robustness of the eurozone and German economy, and also the US non-farm payroll. So just keep an eye on that. I think we're going to sort of see a little bit of a manoeuvring going on there. So we had a look at we had a little bit of a look at the pound against dollar. As I said, we had I thought we're in there as a flag there. So just keep an eye on that based upon what we've talked about with regards to just managing risk with sterling. I'll talk about if we once again we look at dollar yen here. Okay, if I just quickly go out. The weekly chart's been skewed realistically by the big flash crash that we had at the end of last year, start of this year. We can see we pushed down to that 105 level and a bounce back up. If I go down to the daily chart, we've drifted north, but we're above that 20. I like the fact we've had these sort of kind of wicks to the north, and last week we took a sort of a bit of a short position on this dollar, on the dollar yen here, based upon the key reversal here, that after the nice long uptrend. If you want to understand more about key reversals, well, just join us on the Mastering the 4Ms of Trading webinars every Monday at 4 o'clock. You can see we touched on this, how to trade key reversals. That was one of the earliest sessions, which is in the Admiral Markets YouTube channel. But I'm just keeping an eye on that, and what I'm looking to see is the trade has drifted nicely down from our entry at about 109.70, and we've drifted down to about 109.20. What I'd like to see is maybe price drift back up to here, around about where the 20 and the 50 are. I'd like to see the sort of the 20 acting as dynamic resistance, power of 20 period moving average. And if we sort of get another bearish signal here, then actually I'll probably be looking to sort of add to my position. That would be given another indication of a little bit more of dollar weakness, as we touched upon a little bit earlier. Let's have a look at euro sterling. In fact, we've talked about sterling a little bit here, but we had a look at it against the euro. Those of you who've joined me for the last sort of in fact, pretty much since we started doing these real-time daily trading ideas back in around about October 2017. You can see that on the weekly chart, actually, the euro sterling rate has, for the most part, just bounced between that, 87, okay, 87.50 zone at the south end to 90, okay, at the top end. And we can see we've been pretty much in a range zone. Every time we've got down to one, we've come up to the other, and you can see that yourself. And the end of last year, okay, what we saw was, we've talked about, we had a real big, bearish engulfing candle, pin bar, a key reversal, and we talked about price drifting back down to that 87.50 area. But you can see for yourself that that price has crashed through there. It's kind of made its way down to this sort of supply area here, okay, or demand area rather here, down towards this sort of 86.50 to 87.50 zone. And I'm kind of curious to see what happens with the price there. And if I start to go down the charts, what we can see there is that it's just been sterling strength, euro weakness. As I said, I think as people talk about the possibility of a hard Brexit, the view is that at this moment, this week, that might have a harder impact on Europe than it might do on the UK at the moment. And not surprising if that has seen that sort of sell-off in the eurozone. But what I'm looking at is, here, if I go down to the 4-hourly chart, what I'm curious and interested to see here is that actually at the moment I see that as a little bit of a pullback there. Okay, we've got a bit of a pullback in the trend, a little bit of a bit of a flag, okay, a counter trend line break sort of showing up there. What I'd be looking at is I'm kind of interested that we've just had this 4-hour candle here. All right, so it's it's a little bit of a bearish engulfing candle. Okay, it's it's a little bit of a bearish pin bar, and I'd be once again I'd be curious to sort of be a short trade on this. That would just indicate more euro weakness and a little bit of sterling strength. Once again, as I said, take into account that we've got a little bit of an interesting day going on. All right, so be very, very wary of that. For those of you who have a risk appetite, well then you might be looking to be short there around about 86.79 with stop loss about 87.14, and then targeting down towards those kind of recent lows around about 86.34, 86.30 zone. Okay, for those of you who like to sort of have let's say to see some confirmation in the trade, you might be looking to see could price sort of move down, okay, after the vote later on, and then would we get a close the other side of that counter trend line, other side of that 20 period moving average. That in itself would be a rather bearish signal, and then that might be an opportunity to sort of take a short position there if you think that we will continue to see sterling strength and euro weakness. So we've just got a moment or two left. I'll finish off with a bit on the DAX. Okay, so here we go. Look, weekly charts. We've rallied all the way back up to sort of above 11,000 to 11,000 to sort of 300. We've been in a little bit of a zone there. If I go down to the daily chart, we've managed to get above that 50 period moving average there, haven't we? We've managed to get above it. We talked about it about a week or two ago, saying I'd like to see it come back down actually sort of just, look at basing off 11,000 zone there, which is what we've seen. We go down to the 4-hourly charts. Well, what we had last week was, we talked about this. We talked about, there being a bit of a flag pattern. We looked at having a trade here. Okay, that was last Tuesday. Unfortunately, because we've taken an aggressive entry, we actually got washed out on our first trade. Then actually what happened is, and this can happen with trading, is our second opportunity set up. Price actually just needed to pull back a little bit deeper. We had a big bullish engulfing candle here, okay? Big bullish engulfing candle here. We had a big, it was a big key reversal candle as well. And so, for those of us who are sort of looking at that and trading that later on in the week, okay, we were long around about the kind of 11,050 mark with stops beneath 11,000, and we ran our way up towards our target there very nicely towards the end of last week. But what I actually see is that, I actually see this setting up again. I see this as we've talked, there's been a few flag patterns here, okay? Hopefully you can see that flag pattern there. We've seen, a little bit of a bearish flag there on euro sterling, bullish flags on pound against dollar, and now another bullish flag on the DAX. And so I see that, we've had, this is a pin bar. Even though we've had a bearish close, it's a bullish pattern. And what I'll be looking at here is to finish off, I'll be looking, getting long just above there, around about 11,236. Stops around about 11,155. Targeting around about 11,350, 11,360. So going to be risking around about 80 ticks for about 120 ticks profit. So it's about a 1.5 reward to risk. It's a little bit less than I would normally, but this is, as I said, this is a rather busy week in terms of news. So with that, I'm quite happy to sort of take 1.5 reward to risk trades, and knowing that there'll be all manner of news coming out to sort of shift and move markets. So there you go, Alexander. Quick flush through a lot of the charts as always. If we've got time for any questions, I'll take them. Alternatively, I wish you all a good trading week and look forward to seeing you next Tuesday.
Thank you very much, Paul. No questions for you at the moment. I'll finish off the webinar with my moderation. Thank you very much for your comprehensive analysis, Paul. Thanks to the audience for listening. I hope you enjoyed today's webinar. If you did enjoy it and would like to review it, you can do so anytime. Just give us an hour or so to upload it onto YouTube. I wish everyone a good day ahead. Goodbye.